Welcome to Daily Crypto episode 14. Today, we're taking a deep dive into what's been moving and shaking in the cryptocurrency market recently.
That's right.
Think of this as your shortcut, really, to understanding the key shifts and maybe what they might mean for you.
Yeah, there's a lot of noise out there.
There really is. We've tried to sift through it to bring you the crucial information.
Exactly. It's pretty wild out there, and our goal is just to provide some clarity, maybe some context around the most important stuff happening.
Okay, so let's get into it. Where should we start? Prices.
Yeah, let's look at the numbers first. Always a good place to start.
All right, so Bitcoin is currently sitting around $85,025. It's showing a slight climb, just over 0.5%.
hmm Pretty steady there.
Ethereum, kind of similar story, hovering at $1,587, but with a really marginal increase, almost flat.
Right. 0.01%, basically nothing.
But if you look beyond those two, you start seeing a bit more action, don't you?
Definitely. BNB, for instance, that's jumped over 1.2%, trading at 592%.
Okay, that's more noticeable.
And Solana, too, SOL is up. It's sitting at $134 with a, decent 0.9% gain.
So what do you make of this sort of mixed performance then? Bitcoin and Ether pretty quiet, but BNB and Solana moving a bit more.
Well, it's interesting, isn't it? It could suggest that while the big two are consolidating, maybe some investors are looking for opportunities in other established altcoins.
Diversification, perhaps.
Exactly. Could reflect a broader appetite for diversification within the larger crypto market.
Okay. Now, XRP seems to be bucking that trend among the top coins. It's priced at $2.08, but it's down about 1.4%.
Yeah, a slight dip there for XRP.
And then, of course, we have the meme coin sector. Always a roller coaster.
Oh, absolutely. Never a dull moment.
So Shiba Inu, slightly down, 0.000000119. Pepe has edged up a tiny bit to 0.000000073.
Okay.
Bonk, though, that's seen a nearly 2% drop, down to 0.00000000119 as well.
Right. So quite a bit of red there, too.
Yeah. Dogwoof is up just a touch, 0.383306, and Popcat is down almost 2%, trading at 0.257739. So this classic meme coin volatility. What can someone trying to understand this space take away from these kinds of swings?
I think it just really underscores the high risk, high reward nature of these particular assets.
Right.
These coins, they often see these dramatic price movements driven by social media, by hype, community sentiment.
That fundamentals.
Not underlying fundamentals in the traditional sense. So for you listening, it's a reminder that while, yeah, the potential for quick gains might exist, so does the very significant risk of, well, equally quick losses.
Definitely something to keep in mind. Okay, let's shift gears a bit and talk about some of the news that's been making waves. The Solana ecosystem seems particularly busy.
Yeah, quite a lot happening there.
There was a Q&A with Figment about the new TSX Solana staking ETF, ticker SOLQ. For someone, maybe an investor, listening, what does the introduction of an ETF like that signal?
Well, it's actually quite fascinating. Launching a Solana staking ETF on a traditional exchange, like the TSX in Canada, it really indicates a growing acceptance, I think, of Solana by more institutional investors.
Right. It gives them an easier way in.
Exactly. It provides a regulated and potentially more accessible way for institutions, maybe even individual investors, through the normal brokerage accounts to get exposure to Solana's network rewards, the staking rewards, without having to, manage the staking themselves directly.
That makes sense. Could bring more capital in.
Potentially, yeah. It could lead to increased capital flowing into the Solana ecosystem.
And it seems it's not just about new investment products. Coinbase is reportedly upgrading its Solana infrastructure, I guess after some past issues.
That's right. They've had some hiccups.
Why is that kind of, behind-the-scenes plumbing work important for Solana's health overall?
Oh, it's absolutely vital. If you think big picture, robust infrastructure is the bedrock for reliability, for scalability, for any blockchain network. So Coinbase improving its integration shows a commitment to providing a stable, dependable platform for its users to interact with Solana. And that's crucial for wider adoption, for user confidence in the long run. It directly impacts your ability to actually use the Solana ecosystem smoothly.
Okay, still on Solana, Galaxy Digital has proposed a new voting framework, apparently aimed at reducing Solana's inflation rate.
Yeah, that's another interesting development.
So what are the potential implications of lowering inflation for someone, say, holding Solana tokens?
Well, that touches on a really important question about the long-term value, right? Currently, new Solana tokens are created over time through inflation, which can dilute the value of the existing token.
Like printing more money.
Sort of, yeah. So a proposal to reduce that inflation rate could mean a slower increase in the total supply.
Right.
That could potentially make each existing SOR token more scarce and maybe more valuable down the line.
And the fact it's a proposal suggests the community gets a say.
Exactly. The fact that this is being proposed through a community voting framework is also pretty significant. It gives stakeholders, the people holding SOL, a direct say in the network's economic future.
Seems like there's action within Solana's DeFi space, too. Raydium, a DeFi platform, is launching its own meme coin launch lab, after splitting with Pump.fun.
Yeah, that's quite the move.
What does that tell us about, well, the state of DeFi and maybe the sheer influence of meme coins right now?
It's interesting, isn't it? It shows how the popularity, the sheer hype around meme coins is even shaping the strategies of more established DeFi platforms.
Right.
Raydium, launching its own pad, suggests they see significant user demand, maybe potential revenue, in facilitating the creation of these meme coins. For you listening, just highlight how the lines are blurring between different crypto sectors. You need to be aware of how trends like meme coins can ripple out and impact even more established areas like DeFi.
Okay, let's switch over to Bitcoin for a moment. There's this intriguing challenge called Project 11, offering 1 Bitcoin to anyone who can crack a Bitcoin private key using a quantum computer.
Yeah, I saw that. Sounds a bit like science fiction, doesn't it?
It really does. But what are the sort of longer-term security considerations for Bitcoin and maybe other cryptos that this kind of challenge brings up, even if it's not possible right now?
Well, it raises that critical question about the future of cryptographic security. Right now, today's quantum computers aren't capable of breaking Bitcoin's encryption. But this initiative, Project 11, it's a kind of forward-thinking way to explore potential future vulnerabilities.
Stress testing the future, almost.
Kind of, yeah. For you, it's just a reminder that the security of your crypto relies on really strong cryptography, and that ongoing research and development are absolutely essential to stay ahead of potential technological threats down the road, like quantum computing.
Okay. And on a more immediate note for Bitcoin, its hash rate, the network's computing power, has hit a record high. Apparently, even while some miners might be selling off coins, what does a high hash rate actually signify for the Bitcoin network right now? Is that good news?
Oh, it's definitely good news. A record high hash rate indicates a very, very strong and secure Bitcoin network. The hash rate represents the total computing power that's dedicated to mining new coins and securing the blockchain transactions.
So more power equals more security.
Essentially, yes. Even with reports of some miners selling, the fact that the overall hash rate is at an all-time high suggests continued strong participation and investment in the network. That enhances its resilience against potential attacks. It's a positive sign for Bitcoin's stability and security for you as a holder or user.
Right. We're also seeing some pretty significant moves from institutional players, aren't we?
Seems so, yes.
Like a 16's crypto acquiring a hefty $55 million worth of Layer 0 ZRO tokens, and apparently they're locking them up for 3 years.
Wow, okay, that's a serious commitment.
What does that kind of long-term investment, especially from a major VC firm like Andreessen Horowitz, tell us about the potential they see in projects like Layer 0?
Well, an investment of that size, especially with a significant lockup period, it really signals strong conviction. A16 clearly believes in Layer 0's technology and its potential, likely around facilitating interoperability, getting different blockchains to talk to each other.
So connecting the dots between chains.
Exactly. For you listening, it suggests that these cross-chain solutions are being viewed as increasingly vital for the future of the whole crypto ecosystem. It could lead to more seamless interactions between different networks eventually.
And speaking of big players, Binance is reportedly in talks with various countries to help them set up strategic Bitcoin reserves.
Now that is interesting.
How could that idea, nations actually holding Bitcoin reserves, potentially reshape, the global perception and maybe even adoption of crypto?
Yeah, if we connect that to the bigger picture, that could represent a really significant shift in how nation-states view Bitcoin. Moving beyond just seeing it as an asset class or something individuals trade to actually considering it a strategic reserve asset, well, that would be a major step.
Towards mainstream acceptance at a government level.
Precisely. For you, that could eventually lead to greater stability, maybe wider acceptance of Bitcoin on a truly global scale. Still early days for that, of course.
Of course. Okay, let's turn to regulation for a sec. Slovenia is proposing a 25% tax on personal crypto profits.
seeing more of this kind of thing.
What does a development like that, even in one country, tell us about the sort of evolving regulatory landscape for crypto globally that people should be aware of?
It really just highlights the ongoing efforts by governments pretty much everywhere to understand and regulate the crypto market. Slovenia's proposal is just one example of how tax frameworks for digital assets are being figured out.
So expect more rules, basically.
I think so. For you, it just underscores how important it is to stay informed about the tax laws in your own country and the increasing likelihood that more comprehensive crypto regulations will be implemented globally over time. It's becoming part of the financial furniture.
Okay. Back to DeFi for a moment. We saw a notable surge in the total value locked, or TVL, of Etherlink. That's on the Tezos network, right?
Yes, Tezos ecosystem.
And this growth was apparently fueled by something called their Apple Farm Incentive Program. How effective can these kinds of incentive programs actually be in driving growth in DeFi ecosystems?
Oh, they can be incredibly effective, especially in the short term. The big jump in Etherlink's TVL really demonstrates how offering rewards for participating, like through yield farming or liquidity mining, can quickly attract users and capital to a platform.
Draws people in?
Exactly. It drives adoption and increases the overall value locked within the protocol. For you, it shows the potential for earning passive income in DeFi, but, and this is important, also the need to understand the risks associated with these programs. They don't last forever, and there can be smart contract risks.
Right, always risks. And still on connecting different parts of the crypto world, Valora and Across are partnering up, apparently to enable cross-chain swaps across, 17 different networks.
17, yeah. That's quite a few.
Why is this kind of interoperability, making swaps easy across chains, so crucial for the future of DeFi?
Well, interoperability is, frankly, one of the key challenges in the blockchain space right now. Being able to seamlessly move assets, move data between different networks is really fundamental if we want to create a more unified, more user-friendly DeFi ecosystem.
Reduces the hassle factor.
Big time. Partnerships like this one, facilitating cross-chain swaps, they reduce friction, reduce complexity for you as a user.
Yeah.
And that potentially opens up a much wider range of opportunities across the whole DeFi landscape without having to juggle multiple wallets and bridges quite so much.
Okay. We touched on meme coins earlier, but there's another mention here. Fartcoin.
Oh boy.
Apparently potentially seeing a price breakout based on a, quote, bullish pennant pattern targeting $1.52.
Right. Technical analysis on Fartcoin?
Yeah. What's the significance, if any, of applying these kinds of technical analysis patterns to something as, sentiment-driven as a meme coin? Does it even work?
That's the million-dollar question, isn't it?
Yeah.
Well, technically, you can apply technical analysis tools to any traded asset, including meme coins like, Fartcoin. It's crucial to remember what drives these prices. Mostly, yeah. Social media trends, viral moments, online sentiment, far more than traditional trading patterns often seen in stocks or even major cryptos. So while a bullish pennant might look like it suggests an upward move based on past price squiggles, the highly speculative nature means these patterns can be completely blown apart by a sudden shift in online mood or a tweet from the right influencer.
So take it with a massive grain of salt.
An enormous grain of salt. For you listening, it's a reminder to exercise extreme caution and absolutely do not rely solely on technical analysis when you're dealing with meme coins. It's a different beast.
Okay. And on the flip side of the meme coin craze, the Base blockchain is apparently facing some backlash after a meme coin that was promoted on their network crashed pretty hard.
Yeah, that's the risk, isn't it?
What does an incident like that highlight about the risks involved, both for the users jumping in and maybe for the blockchain platforms themselves?
It really underscores the potential downsides, the sharp edges of this whole meme coin frenzy. For users, it highlights, again, the significant risk of investing in assets that are incredibly volatile and often have very weak or non-existent fundamentals.
You can lose your shirt quickly.
Very quickly. And for the blockchain platforms, like Base in this case, it raises questions about their responsibility or perceives responsibility in promoting or even just allowing the listing of these kinds of tokens. There can be real reputational damage when these projects implode spectacularly.
So a cautionary tale for everyone involved.
Definitely. For you, it's just a strong warning against blindly following hype and underlines, yet again, the importance of doing your own research, if you could even call it that, with some meme coins. Understand what you're buying, or maybe understand that you don't fully understand it.
Good point. Security, always a big topic. Kilo X reported a $7 million hack to authorities in Hong Kong. They have said they'll compensate users, which is something.
That's good, but still, $7 million is significant.
Yeah. And relatedly, maybe, Safe the Custody platform is apparently cutting team members just a few months after the Bybit hack occurred.
Interesting timing.
What do these kinds of events tell us about the ongoing security challenges in crypto that people really need to stay aware of?
They're just stark reminders, really, that security threats are persistent in the crypto world. Hacks, exploits, potential vulnerabilities in both centralized exchanges, and, different kinds of custody solutions. These are ongoing risks. It's not something that's been solved.
So stay vigilant.
Absolutely. For you, it emphasizes the importance of choosing platforms carefully, using strong personal security measures like two-factor authentication, unique passwords, maybe hardware wallets for larger amounts, and really understanding the specific risks associated with how you choose to store your crypto.
Okay. Interestingly, and slightly outside direct crypto news, the Dow Jones saw a notable drop, apparently linked to issues with United Health and also Fed tensions.
Right, broader market jitters.
While it's not directly crypto-related in this report, how does the performance of traditional financial markets sometimes intersect with or maybe influence the crypto market for someone watching both?
That's a good question. While the crypto market definitely has its own internal drivers, its own narratives, it's not completely isolated from the broader economic mood or events in traditional finance.
They're not totally separate worlds?
Not entirely, no. Things like inflation worries, changes in interest rate expectations from the Fed, the performance of major stock indices or big companies, they can sometimes impact overall investor risk appetite. And that appetite, whether investors feel bullish or bearish overall, can indirectly influence the flow of capital into or out of crypto, which is still seen by many as a riskier asset class.
So keeping an eye on the big picture helps.
It can, yeah. Watching those macroeconomic trends can provide a more holistic view of the overall financial landscape that crypto operates within.
Okay, got it. Finally, let's just quickly touch on some other, maybe slightly smaller altcoin developments that caught our eye.
Sure, a bit of a roundup.
There's some analysis suggesting Near Protocol might be gearing up for a recovery. On the other hand, Algorand is potentially facing more price drops because of staking outflows.
Right, opposing signals there.
Cardano is being talked about for a possible significant price jump, but looking further out into 2025,
Long-term view on that one.
Stellar and Aeon are teaming up to facilitate payments using XLM and USDC in Southeast Asia. That sounds like real-world adoption.
Yeah, payments are always interesting. Shows utility.
And Shardium, a Layer 1 project, finally confirmed its token launch for May 5th after some delays. So new projects still entering the ring.
Always new contenders.
So quite a diverse mix there. What's the key takeaway for someone listening from this sort of grab bag of altcoin stories?
I think these individual stories really just highlight the sheer breadth and dynamism of the altcoin market. It's not one single thing.
Right.
Each project has its own unique catalysts, its own specific challenges, its own potential roadmap. For you, it just underscores how important it is to do thorough research and understand the specific factors driving the price, the adoption, the tech of individual altcoins, rather than just painting the entire market with one brush.
Treat each one on its own merits, basically.
Pretty much, yeah. Or at least understand the specific niche it's trying to fill.
Okay. So, to try and sum up this deep dive then, we're seeing a crypto market that's, well, characterized by mixed price movements, some up, some down, some flat. Significant developments happening within key ecosystems, especially Solana and Bitcoin catching the eye recently.
Definitely a lot of focus there.
Continued signs of institutional engagement, like the A16s deal and the ETF talk.
Right, the big money is still circling, still investing.
An evolving regulatory landscape, with things like the Slovenia tax proposal as an example.
Yeah, governments are definitely paying closer attention.
And of course, the ever-present excitement, volatility, and let's be honest, risk associated with meme coins.
Can't ignore the memes. They're a part of the ecosystem now, like it or not.
So it seems staying informed about all these rapid changes is pretty crucial if you're involved in this space.
Absolutely essential. The market is constantly evolving, constantly throwing up new opportunities, but also new challenges. You have to keep up.
Join Daily Crypto for real-time market updates.
And maybe a final thought to leave people with. With this increasing institutional involvement we talked about, and the growing regulatory scrutiny, how might the fundamental nature of the cryptocurrency market actually evolve in the coming years? It's a crucial question, I think, for you to consider as you navigate this space going forward.